Hey, did you see what happened with MobiKwik's stock today? It took a nosedive.
Yeah, I saw that. It looks like their shares tanked, hitting a new 52-week low. It's down like 15%, right?
Right. Apparently, it's because the lock-in period for some of their pre-IPO shares expired. I mean, what's a lock-in period anyway?
Well, basically, after an IPO, some investors, like early backers or employees, can't immediately sell their shares. It's to prevent a massive sell off right after the IPO, which can hurt the stock price. This lock in period was 3 months, and now that it's over, those shares are free to be traded. So, yeah, a big chunk of shares, like 6% of their outstanding stock, suddenly became available.
Aha, so people are selling and that's driving the price down.
Exactly. There's increased selling pressure. The stock even dipped below its IPO price of 269 rupees, which is, not a great sign.
No, definitely not. I remember their IPO debut was pretty impressive, wasn't it?
It was, they listed at a premium around 440 rupees, which was a pretty good jump from the IPO price. That was back in December 2024. But now it's a different story, actually.
So, what's the overall picture? Just how bad has the drop been?
From its post listing high, the stock has fallen by, get this, 61%. And it's down 24% just in the last month. In the past week alone, shares have fallen by 13%. It's like a roller coaster going straight down.
Wow, that's a significant decline. Are there any technical indicators suggesting it might go back up, or is it just doom and gloom?
Well, the technical indicators aren't looking too hot. The stock is trading below all the key simple moving averages, including the 50-day SMA, plus their relative strength index or RSI is signaling oversold conditions, which usually means potential for further weakness. So, yeah, it's not a pretty picture right now, actually.
Oversold, huh? That sounds serious. So, how are the company's financials looking?
That's where it gets a bit more complicated. For the third quarter of FY25, they reported a consolidated net loss of 55.28 crore rupees, which is a big drop compared to the 5.27 crore rupees profit they made a year earlier. However, their revenue did rise by almost 18%, hitting 269.47 crore rupees.
Okay, so revenue is up, but they're still operating at a loss. Is that a recent thing?
Not exactly. In the previous quarter, Q2 of FY25, their net loss was much smaller, only 3.59 crore rupees, and their total income grew by 42%. So it seems like things took a turn for the worse in this last quarter, actually.
Interesting. Maybe this is a good time to remind our listeners that these are just observations. And, disclaimer, we advise investors to check with certified experts before taking any investment decisions.
Definitely, that's crucial. Always do your homework.
So, what are some of the key stats for MobiKwik?
Well, as of December 2024, they had 172 million registered users and 4.5 million merchants. Their payment gross merchandise value, or GMV, was 294.5 billion rupees in Q3 FY25. That's pretty solid growth, actually.
So, the user base and merchant network are still expanding?
Yes. They added 5 million new users in that quarter and onboarded 110,000 new merchants. Their payment take rate, which is the percentage they earn from each transaction, was about 0.67%.
Okay, so the payment side seems to be doing well, What about their financial services, like their credit products?
That's where they've faced some headwinds. Their digital credit GMV was 7 billion rupees in Q3 FY25, but that's down significantly year on year. It seems like they've been scaling down their small ticket credit product, Zipped, due to lower appetite from their lending partners.
Lower appetite? What does that mean?
Basically, the companies that provide the funds for those loans aren't as keen on offering small loans anymore. So MobiKwik is focusing more on larger, longer-term loans to higher quality customers. It's like learning to adapt a recipe when you're missing some key ingredients.
Right, makes sense. So less focus on small loans, more on the bigger ones. And how has this shift affected their revenue mix?
Well, the revenue mix has tilted more towards the payments business, which has been growing strongly. The financial services revenue has taken a hit due to the challenges in the lending space.
So they're more reliant on payments now. And what about their costs? Are they managing to keep those in check?
They've been trying to keep their fixed costs stable, but their overall contribution margin, which is revenue less direct costs, has been compressed. This, in turn, has led to a moderation in their EBITDA, or earnings before interest, taxes, depreciation, and amortization.
EBITDA is the fancy way of saying operating profit, right?
Almost, it gives you a sense of the company's operating profitability, but before you factor in things like interest and depreciation. And their EBITDA margin, which is EBITDA as a percentage of total income, was negative in Q3 FY25, actually.
Okay, so costs are an issue. So what are some of the growth areas they're focusing on?
They're betting big on a few things. One is Pocket UPI, which lets users pay on the UPI network using their digital wallet. They're also partnering with a bank to offer RuPay credit cards on UPI, which they hope will replace the volumes from their Zip product. Plus, they're looking to monetize their merchant network through things like rental income from sound boxes and MDR income from RuPay credit card payments,
Sound boxes, yeah, those little things that announce the payment at stores. What else?
They're also working to grow bill payments. Also, MobiKwik was the first fintech company to do a full launch of central bank digital currency, or CBDC, with RBI, offering e-Rupee wallets.
E-Rupee, right. What are the advantages of using that?
Well, it offers user anonymity, allows for offline money transfers, and has programmability. So, yeah, it can be coded for specific uses, actually.
Interesting. So they're trying new things. But back to the stock price. Do you think it will recover soon?
That's hard to say. The market can be unpredictable. The expiration of the lock-in period definitely put downward pressure on the stock, and the company needs to address the challenges in its financial services business and improve its profitability.
Well, let's keep an eye on it, And to our listeners, if you enjoyed this discussion, be sure to like, share, and subscribe to our YouTube channel for more insights.
Absolutely. And remember, investing always carries risk.
So, what's the big takeaway here? MobiKwik faces some real challenges, right?
Yeah, it is like they're sailing through rough seas right now. The drop after the lock-in expiry shows investor nervousness. They need to balance growth with profitability and find new avenues for revenue. Their payment platform is strong, but they need to sort out their financial services side.
Absolutely. It will be interesting to see how they navigate these challenges in the coming quarters.
Definitely, it's a company to watch for sure.